What's up, everybody? Welcome to a fresh episode of the Real Estate Reserve Podcast. I'm Jason Balin from Hard Money Bankers and Ian Horowitz from Equity Warehouse, coming in live from his new studio that he's showing off. If you're tuning in for the first time, welcome. We promise we'll keep this show entertaining. You'll learn something as well. We have a great guest that we're going to introduce here in a second. And if you are a full-time follower and viewer that are just sitting on the edge of your seats waiting for us to release another episode, welcome back. We certainly appreciate it, and we'll make sure we keep this entertaining. Ian, what's up with you today?
Nothing, man. Just enjoying this beautiful warm weather. I can't really say anything because our guest is way further south than us, but it's been oppressively hot around here. Got to support a good cause golfing earlier this week. But other than that, like you said, we do have a lot of good guests coming up. Our calendar is filled basically for the next 3 or 4 months of guests that we have coming in. So if you guys are interested in jumping on, all these podcasts are done with people that we know. We don't bring in gurus. We don't bring in people that are selling stuff. We bring in people who are actually doing deals and down to earth, normal human beings. And that's who we like interviewing, because that's who we resonate with. We don't do the guru market. So I always get excited for these, and I really get excited when we talk to someone who's super close to us and are doing big things in the real estate world. So I'm excited for today's episode.
Cool. Yeah. So let's bring Christian on the show. Christian, how are you?
Good. How are you guys doing? Thank you for having me.
Yeah, absolutely. Thanks for tuning in from Dallas today. I'm guessing it's probably a little warmer than here, but it's freaking hot around here, man. It's been hot and humid around the 90s in the last 2 weeks.
Yeah. That sounds nice for us. I think it's usually triple digits here in the summer.
Yeah, but they all say, "Oh, it's a dry heat." That's my favorite one. Oh, it's a dry heat. I'm like, I don't think it freaking matters, dude. Like, hot is hot, right?
That's true.
Dude, we were in Dallas a few weeks ago, and Ian and I were playing golf, and I remember afterwards we're outside, and this waitress was like, "You're not going to sit there, are you?" Like, we were all sitting around, like drinking and about to have food, and we're like, "Why? What's wrong with this table?" And she was like, "Don't you see all the pollen on that table?" And I'm like, "This is nothing." Like, it was such a little bit of dust. Like, when we get hit with pollen, like it's bad. So, anyways, Christian, tell us a little bit about yourself, how you got started in real estate, if you don't mind.
Yeah. So, based out of the DFW area, husband, father. I like to call myself a professional opportunist in the commercial real estate space. Spent 12 years in the Army Reserve. I was an intel officer. And then those first 5 were enlisted. And then, so I didn't really get into real estate until I bought my first house. And even at that point, I wasn't really in real estate. I was just, I accidentally did the whole house hacking thing, bigger pockets. And I ended up renting a room out to a buddy of mine. And then about 6 months in, this was about 6 months in, after I used my VA loan to buy my first house. I think I was 25 at the time. And then about 6 months in, I was like, hey, my buddy's paying half my mortgage, and, kind of seeing the power of real estate. And then I still had entitlement left on my VA loan. So after the first full year, I made that house a full rental, and then I went and bought another house, and then I took him along with me. So he continued to pay half my mortgage until I got married. But, I've always had kind of a knack for buying low and selling high, if you will. I guess it started, I was in first or second grade, and I used to find rocks that look like fossils, and I'd sell them for like 10 cents on the playground. And then from that point on, just buying cars. I think, once I got out of high school, I was buying cars and making them look better, flipping them and whatnot.
So you've always had that value add, like, deep down inside of you. Like, it's always been a part of something that you've done.
Yeah. I've always just like taking something, like I could see the vision of something when other people couldn't. Like, I remember, I think I was 19 at the time. I bought this 1972 Oldsmobile Cutlass. And I got it off of Craigslist. It was like $3,000. And I remember I had a friend go with me to go check it out. And so it ran and, it ran and drove, but it was missing a windshield. So I drove it from one town to the next without the windshield, and the seats were all rickety and, but as soon as I got it back home, I got to working on it and making it look better. And then I eventually just traded up until I got to like a BMW 5 Series, and then I just, took it from there. So yeah, I've always had that kind of that thing where I could.
Did you just sell a GTR, or?
I still have it for sale, but yeah, I mean, that was kind of the same. I've always had all kinds of different cars and stuff, JDM to muscle car, whatever. So it's always been part of me. I'm a big car enthusiast. So,
but I mean, I think you hit the nail on the head. And I know Jason's probably thinking the same thing I am. Is like you said it. We've been talking a lot about it on our episodes recently. It's like you start low and then you just keep trading up and up and up and up until you got your dream car, you got your dream asset. Like it's the same principles apply. I mean, do you ever apply those principles into your real estate portfolio?
Yeah, I mean, so I guess we'll take it to when I bought those first two properties. I would say I really got deep into real estate around 2019. About 6 months after I started with doing the house hacking thing, I was working a W-2, and I was working about an hour. I had an hour drive every day. And so on that drive, I'd spend the entire hour listening to Bigger Pockets podcast and different books. And I stayed at that job for about a year. And so I kept that first house as a rental. And it actually ended up being a 1031 exchange last year into a portfolio that I bought, self-storage portfolio. I get more into that a little bit later. But and then end of 19, I started flipping houses. And then I got into Airbnb, which is really where I learned how to systematize. And, I got really focused on systems and processes, and that pretty much just bled over into self-storage. But yeah, same thing, same concept with the cars. You buy a house that's in disrepair, you make it look better, you make a profit on it, and with vehicles, it's usually not as big as a profit as we were making in flipping houses. You used to make around 20% margin on house flips. So, but I realized that was all transactional income. I mean, same thing with wholesaling and whatnot. But, and I also looked at, I like to analyze where I'm at in my career and life, and the guys that were successful in the single family space, the ones that were just landlords, it typically took them 10, 15 years to build a sizable portfolio that would replace their W-2 income, and that's not what I wanted, which is why I made the jump to commercial real estate.
Yeah, well, it's good that you kind of learned and saw early on that, and you probably saw firsthand. I've never heard of car hacking, but it's probably a thing. I'm guessing it's a thing, and it makes perfect sense to me, right? For anything, but I mean, that probably taught you early on of like, hey, I made $1,000 flipping this car, and then I upgrade to a better car, and then I make $5,000 or $10,000, or you just have a better car that you drive yourself if you want to keep it that way. Like you don't even have to think of it as an investment vehicle, but I think that's where a lot of folks get stuck of like, hey, I'm stuck in this grind. I make good money, but I'm not making great money, and I work hard. And it could be as simple of trade to a different type of asset class. And trade, right? Like, I mean, one thing that I relate this to, and this is something I think about literally all the time, is the reason that super high net worth and wealthy people are going to continue to get just dominate everybody else and continue to get bigger and bigger and bigger is like, if you double $1 billion, you have $2 billion. If you double $100,000, you have $200,000, right? Like, it's like this. It's so much bigger. And I feel like a lot of folks don't grasp that, I think sometimes. I mean, like Ian and I have been chatting about some properties that I have some passive ownership in on the LP side of some like storage facilities. And it's just like, let's get rid of some of these little things because it's just not worth it. Like, there's only so big that they can get. And I think you kind of nailed it with what you said, and you got it. And you probably, you got it, I think, a lot earlier in your career than most, definitely more than I did. In my career, it took me a long time to realize, like, hey, like, we need to start working and investing in bigger asset classes if we want to see bigger returns.
Yeah. You know what I did was, I had gotten started on the single family side. And I think about a year and a half into that, I pulled a list of the wealthiest people in real estate, and the top majority of them own commercial real estate. And so that was like, well, there it is. I mean, I need to focus on that and figure out how to get into that. And initially I was looking at multifamily, but, obviously barriers of entry a little bit higher than self-storage. Either, a lot of guys tend to go the syndication route, but at the time I wasn't really looking at doing the syndication route. You have to have either a track record or net worth or what have you. So that's when I had stumbled across self-storage and then the Storage Rebellion group and all that stuff. So
yeah, no, and it makes sense. I think a lot of people put up this hurdle of like how to bridge the gap, but people do it with everything, bridging the gap from wholesaling to flipping houses, or flipping houses to building a rental portfolio, becoming a hard money lender because they don't like real estate, or they don't like actively owning real estate, or going from residential real estate to commercial real estate. Like, what mental hurdles did you have to break down to make that leap of faith?
So I think a lot of the reason why people get stuck in the single family space is because they're scared of that extra comma. And, it's really just figuring out how to get over that hurdle. So for me specifically, I remember dealing with my first self-storage property that I had gotten from a direct mail campaign. And the seller, one of the first things he told me was, he had already fully depreciated the property, so he was going to need to either carry the note as one of the options, or he's going to have to do a 1031 exchange. Now, the guy that I was speaking, the owner, was 77, and he's not, active in the real estate game anymore. So it was doing the seller carry. Now there was still $150,000 note left on that property. And initially it was going to be, how was I going to get the 150,000? And at that time that we were discussing, I was still moving forward with him, but I wasn't sure where I was going to get the 150 yet. And then eventually on these first two deals, it just ended up where we did nothing down. But, I kind of really focused on giving on price and taking on terms. So whatever price he asked for was what I gave him. And it worked out for me because when I did the underwriting, it still made sense. I was actually going to offer him more, but when we were first speaking, I let him tell me the price first, and it was lower than my initial offer. So I was like, okay, let's do that. I gave him his interest rate that he wanted, and we had agreed on, I wasn't going to refinance for a few years at least, but the following year he allowed me to refi. So that really helped out too.
Yeah, it's all that military intel paying off, I guess. All the years in the military of just listening and maybe waterboarding. No, I don't know, messing around. But
yeah, we don't do that.
Yeah, no, not here in America. We don't do anything. But how did, I guess it's another good question. And I think we talked about this. Actually, Jay, I think you were there when we were in Dallas. I think we all grabbed beers, or probably tequila. We went to that one Mexican bar. Man, that place was good. Sorry, I'm reminiscing here. But you're, what is that place? Where were we? We were in South
Was
Lake.
it Muchacho?
Yeah, I think that's it. But anyway, how's Intel, how's the military? Is any of that played in your day to day of all right, I used to research people or research things. The government does it this way, or did it give you any foundations to build your business on? Because I know a lot of people go out and build a business and they're just lost. They're going around aimlessly. Has the military, having that background, did that help in any way, shape, or form as you built your real estate portfolio?
Yeah, so I think the first thing was the discipline. So before I joined the military, my mom, growing up with my mom, she was always, pretty she basically made sure I was disciplined. And then when I decided to join the military, I was pretty much set up for success, because a lot of the guys that were in with me during basic training and all that stuff couldn't even get up on time, or they couldn't make their bed right. So that discipline piece was already instilled in me. And then throughout my years of as I got older, I just continued to focus on building that up. And I think that's one of the things that's most important and is required, especially in the military, is, the discipline to be where you need to be in the right uniform at the right time, right place. And then being able to do your job, especially, as an officer, you're in charge of so much and responsible for so much. And they kind of just give you a mission, and then how you accomplish that mission is kind of based on what you think is important. And so, I would say discipline, because, getting up every single day and going after it is not always the easiest thing. Like, for example, you'll see a lot of people talk about motivation. Motivation is fleeting. It only lasts so little. And then the discipline is what gets you through the hard times. Now I wake up pretty early still every day. I wake up at 5, and I don't have to, but I like to, because it keeps me disciplined. I go, to the gym and all that stuff. And then next, I'd say a sense of urgency. I think that if you have a sense of urgency in business and real estate, you're going to be ahead of everybody else, because, as a top performer, you need that sense of urgency to get things done. And then for me, anyway, whenever I come across someone that doesn't have that sense of urgency to get stuff done, it's pretty annoying. So, because of that, I've been able to win more, or win deals that other people haven't. I had that sense to respond to somebody that same day, or whatever the case. And then just the analysis piece. So in Intel, you have to be pretty analytical to, draw conclusions from the limited piece of information that you have. And, I guess that kind of seeps into real estate. When you're building a pro forma, or you're building, your projections, you're drawing from the limited information you have, and building out what you think is going to happen. So it's the same thing. And, just same thing with running a business. I mean, I monitor my profit and loss, balance sheets. I'm looking at all that stuff all the time, to really get, a pulse of the business and where it's going. So I think all those skills have definitely helped.
Yeah, definitely want to dive into your current operation here in a second. Curious to see how that looks, but let's talk about your first deal that you ever did. How did you find it? How did you fund it? Maybe things like that. I mean, I see, in your bio, something related to, you did a $200 direct mail campaign to find the deal. I think a lot of, folks watching and listening always get a lot of value of how did you start? Like, how'd you get that first deal? What does it look like? Where is it today?
On the residential side or the commercial?
Just the first, anything.
Okay.
Your first deal was that one. Well, I guess your first residential deal was the one that you house hacked, right? That you moved into. All right. So and you really didn't need any money out of pocket on that one, right?
Just closing costs.
So let's talk about the first commercial deal then.
Okay. So when I was, as I mentioned a little bit earlier, I was looking at multifamily, but then I stumbled across self-storage. I don't know exactly how, but I did. And then summer of 2020, I had a very small deal under contract. I went through the whole process of it, and then I ended up walking away from that deal just because the financials didn't match, the returns, and there was a huge discrepancy between those. And so I wasn't going to overpay for it. So, but I had spent money on an attorney and all that stuff, like going through the process of it all. And then from that point on, I was like, well, I mean, this asset class seems pretty interesting to me. So I'm just going to go ahead and take the next 4 to 5 months and learn as much as I can about it. So, joining Storage Rebellion, reading somebody like AJ Osborne's book, podcasts, forums, whatever I could find. I spent a lot of time just educating myself on the asset class. And then I think sometime, I think it was like August of 2020, I decided to do a direct mail campaign, and I spent maybe $200, and about a month later, I got a few responses. I got from that mail campaign. I actually, two of the deals that I purchased were from that, and both of the sellers were very mom and pop type sellers. Um, uh, that one was the seller was 77 years old. He lived out of state. He had fully depreciated the property, and this is the one where we did the wrap. So, you know, as I said, I let him give me a number first, and I was just trying to solve his problem. Like I was figuring out what problem he needed to be solved, and I was providing the solution. So, and that for him was not having to recapture on whenever the capital gains.
Yep.
And I spent the next few months just going back and forth with him, building a relationship with him. He used to come down to fly down to DFW, and we would meet. He would stay. I mean, he's pretty well off guy, and he'd like to stay at like little inns and stuff. So we go meet at these inns and just chat and just really build that relationship. And it's kind of funny because one of my buddies, who was also part of the Storage Rebellion, said he had actually reached out to that same seller, and that seller told him something like, go away. So I think just having that relationship that I built with him, and he ended up liking me and stuff, it really helped kind of nail this down.
Yeah, I think most people need to figure out, it doesn't matter what you're trying to buy or sell or a vendor that you're trying to use. It's a lot of it's connection. A lot of it is how you resonate with someone, how you speak, what beliefs you have. I mean, I recognize that with vendors. I recognize it with sellers. I recognize it with brokers, investors,
private capital.
Yeah. I mean, it's all the same thing, is that like there's the connection is what makes it happen. And then after that, whatever service you employ or offer is the benefit of that relationship. And I agree, man. There's been several deals. There's been several things, brokers that we've worked with that are like, yeah, I don't know, man. I like you. We get along. I'm going to feed you some deals, and we've been able to close them. And now the brokers always call us. And I think that goes a long way. And I don't think enough people put time and energy and effort into that relationship piece. And right, like we've built our relationship. We haven't done a deal together, but at some point Christian's gonna be like, hey man, I got this deal, kind of fits your buy box, not for me. And we might do something together, or we might just stay great friends and we never do a deal together. Then so be it, right? Like, but at least you have a good network of people. And I don't think too many people, I think both you guys will probably agree with this, too many people are like business, and don't give a shit about anything else. And guess what they get? They get all the problems that come with that, rather than building the right quality relationships to get the good business, to get the good friends, to have the good allies, to have the good tools in the toolbox to be able to succeed. So I think that's a really great point, man. I'm glad you brought that up. And I hope people recognize what you were saying through that story there about the relationship and the importance of it. So,
yeah, people want to do business with people they like, right? So, and then the way I see it from that point too is like, if you can do business with people you like, and then if you can leave meat on the bone for the guy you're working with, it's just going to be repeat business moving forward. I mean, I've never been, if I ever sell something, I'm not going to maximize all the way to the top where there's nothing left for anybody else. I mean, what fun is that if you can't?
It's got to be a true win-win. Like, you can't leave the closing table, or you can't leave the negotiation with somebody winning and somebody losing. Both people have to win. And, one person's trash could be the other person's treasure. And I think that's an important component to understand. It's, hey, like, oh, you stole that property. You got it for so cheap, right? But then on the other side, they could say, God, thank God Christian bought this property for me. It was such a drag in my entire life. Like, I would have done anything to sell it. So, and he came through. So like, there's so many different sides of that. And I think mature, business owners and real estate investors and veterans of of running businesses, they know that over time, like it's got to be done that way, and you got to say no to a lot of transactions and a lot of deals, just because things change, like headaches. I think a lot of folks that we all know that we do business that are around our similar age, like they're walking away from deals that maybe they thought were home run deals a few years ago, and they might still be good deals for the right party. But it's like, I don't want to go down that road. This thing's going to be a headache. I don't want to mess with that. Our lending portfolio in particular, like I want that thing to be completely clean, no matter what. Like I don't want headaches, even if I can make, potentially more money on them. It's just, there's other times to do things. Let's talk about a little bit about your team. Like, do you work out of an office? Do you have staff, employees, or do you kind of just run the show and then have some vendors that do some stuff?
Yeah. So specifically on the self-storage side, I run my locations remotely. And I do have boots on ground or part-time managers. And, like I said, when I was speaking earlier on Airbnb, we had a handful of Airbnb arbitrage units, and I got to try and figure out like the best way to systematize everything and automate everything. So between the five, I was only spending an hour a week, like managing them completely. We didn't have any other property manager or anything like that, so we're taking home all the profit. And it was essentially the same thing. Like there was different vendors that I integrated with Airbnb that allowed me to automate everything from check-in messages to, thinking about like how to make sure, like how to reduce the amount of questions that I get from a guest. So I would I decided to put together a check-in videos because people would always ask, like, get confused on the check-in process. And I put together a video on like exactly how to check in. So that would limit the amount of questions I get. And I took pretty much the same framework and applied it to self-storage. So right now I have an open API software and a good amount of vendors that help me run it. But as far as like a team, I don't have a team per se. It's just me and my part-time managers. And I spend a few hours a week doing the managing on that for the self-storage.
Yeah. I mean, it's everyone has a different way of doing it, and you probably resonate a lot. I know you came to our group, our mastermind, John Farling, kind of the same way, John Chapman, a couple other guys in there, they like really streamline their operation. Other of us have employees. And I think you need to know who you are and what you want and what you really want to task manage every single day. Like not everyone wants a gigantic team, and not everybody wants to just be by themselves. You really got to know who you are and what you need to succeed. I do want to ask you, if you're in tune, I know we're kind of bouncing around here, but you brought up something that I forgot about, and we were both commenting on it on social media, is the Dallas-Fort Worth or the Dallas Airbnb drama. Are they actually getting rid of all the Airbnbs? And are you still in the marketplace and exposed to it?
Yeah, the litigation came down that if the Airbnb is in a residential area, then I think they have until like December or something to remove themselves. I know they're trying to fight against that, or all the Airbnb operators, but I mean, that's happened in multiple different cities in DFW. I think Arlington has a rule against it unless you're a mile away from the stadium. Anything else is off bans or off limits.
Really?
Yeah. So and I haven't kept up with any of that. My operations were arbitrage, so we would have LLCs renting out corporate leases. We would explain our business model and rent an apartment. I think when we first entered in 2019, it was still kind of coming out like as a thing, as an investment strategy, and the risk would be, I guess, so one thing I ran into was I was in an apartment for already 2.5 years, and the owners already knew what I was doing. I was, renting on Airbnb. I had paper trail on that, and it got bought out, and then the new owners had a problem with it. And so, I was like, I have paper trail that I'm doing what I'm doing is fine, and that was a point of contention between me and the new owners. Class A type apartment, and they let me stay, and because I brought up the paperwork and but they obviously kicked me out of my lease, or they said after your lease is done, you can't continue to operate. So that was the last one that I took down. But I honestly, even though there wasn't a lot of time put into it throughout the week, it's not real estate, it's hospitality, and it's a different set of problems, and it's still the customer is always right mentality. And if your listing is on Airbnb, then the guest has the power always. I've had some crazy stories about the guests having power, even if I have some type of proof. So I decided it was just time to, get that focus back.
Yeah. Well, Dan usually watches these, so he already knows where I stand on them, but I fucking hate them. I hate, dude, it's like a rental that's good, like when the rentals are good and you don't think about it, it's like, oh, it's just fucking great. And then it's like, you get that one asshole tenant who we're dealing with right now that's here for 60 days. And I'm just like, burn the fucking places to the ground, dude. I'm done.
Well, I mean, I think they're below both your guys' pay scales.
100%.
Like I do. And like, that's not an insult to state something like that. Just like it's not an insult to buy like affordable housing when this is your first investment, right? Like you have to start with something. You have to potentially start with that. And then we already talked about this earlier in the show. You have to upgrade and work up your asset class. And you're not going to typically you don't go down after that. I mean, if you already have existing units, that's fine. But like if you're underwriting a 50,000 square foot storage facility and a few $1 million, and then it's like, oh, well, we could buy this Airbnb for $200,000 and we can make $20,000 a year. Like, I mean, $20,000 a year is a lot of money, but not when you're potentially can make $100,000 or $1 million a year off the storage facility. And I think that's where I can see, like I feel like my business partner, Chris, and I are very aligned in our lending operation to see that. And I'm more of a deal junkie than he is on stuff, but like, it's good to like, the moral of the story is like, you just got to be disciplined and ground yourself. And it's just like, listen, those were great assets years ago. We've outgrown those assets type of thing.
And that's what happened to me. I mean, because that was one of the first things I got into in 2019 when I started full-time or almost full-time in real estate. And, at the time coming in 2019, the cash flow was great. I mean, it wasn't building any equity, but it was a cash flow machine because it was like $1,500 a unit on 1 bedrooms. And then COVID happened and we had to figure out a way. I mean, we made it through COVID, but on one of them had to figure out or move it to month, and where you're just breaking even. And then once that was over, it went back to normal. And then with everything, inflation and whatnot, I remember one of the apartments that we're paying like $1,600 at the time on my renewal, I think in 22, because I got out of that one in 22, another one. And the monthly renewal was going to be $2,300. So from $1,600 to $2,300 in this Class A building. And that just completely cuts your revenue in half. Yeah. And it's like, it's not even worth continuing. So I just kind of over time kind of slowly killed them off. And then just really put all my focus into commercial real estate.
That's the military in him. Did you hear that, Jason? He's like, yeah, I just killed them off. Like nothing's wrong. You know what I mean? But
I killed off all rentals. I never used the term killed them off, but I like that.
You murdered them and you put them in the ground. Jason put his in the ground. He said, fuck this. I'm never doing this again. He murdered them, buried them, dug the whole 9. But yeah, I mean, like, let's get into what you're doing now. I mean, like, I think you luck out because you're in Texas. Your state's gigantic. You have a lot of opportunity in your state. But what are you up to these days? I know you're doing some multifamily syndication. What's that look like? And what are you guys actively working on?
Yeah. So I got the storage stuff, and it's pretty locked in as far as systems and stuff. And that's I think we're at about 130,000 square feet there. A part of that is my expansion I'm doing right now. So I bought 6 acres behind it. When one of my existing facilities, cleared out an acre and added more units and some boat and RV parking. And then so I was at this point where it almost felt like I was retired because I had so little time, or I was doing so little things throughout the week. And I don't really like feeling like that. I know a lot of guys don't mind it. But I like to work. I like to do stuff. So, 3, 4, 5 hours a week wasn't cutting it for me. And I had a good friend that we'd been friends for a few years, and he had a syndication group and based here out of DFW. They've been in the business for a couple of years. And so at the time they only had 3, and we run it like a small investment firm. So there's only 4 of us. We each have our specific roles. So I'm director of like business development on that piece. So I'm underwriting all the deals, looking at new markets, bringing on, speaking firsthand to the brokers, and doing that piece. So as far as the syndication goes, we have I think just under 600 units here in the DFW area, and just looking to grow. Like any syndication team, they start with the Class C's and kind of build it up, get into the B's, kind of go from there.
Yeah, and so like how many property? Like, are you guys talking like 50 unit, 60 unit buildings, or bigger or smaller? Like, what do you guys?
We look at 75 to 150 units. Is kind of where we're at.
Yeah.
There's a lot more competition above that. And so if you're in the Class C below that, like, you have a lot more opportunity. Right now, as you guys probably know, the market is just everything's still kind of frozen up. 10-year treasury and all that stuff. It's just it's been hard. A lot of negative leverage properties that come across, and it's just like, this makes no sense.
Yeah, I don't get how people are doing them. It's just insane to me, the negative leverage piece. It's like you're wishing and hoping, and it's like you can tell what people's morals are there. They're like, their mindset is, I'm going to get my fees, and fuck it, if this thing works out, then it's going to be fine. That's crazy to me.
Yeah, I mean, there's some guys here in the area that, not saying that something's going to happen to them, but there's some reports that they're not doing that great. Like that Houston guy had like 200 million foreclosed on or whatever.
Oh yeah, yep, saw that. Yep.
But it's just a tough time right now, probably for everybody across the board on the deal front. So
yeah, and here's the thing, like the folks that have a built out business, or they're grinding to create a business, like they'll transition into what makes the most sense, right? In this particular case, like if you're reliant on just transactional deals, it's challenging, right? Because there's less transactional deals. That's not to say that, so, I mean, listen, there's a lot of real estate investors that are kind of licking their chops right now as well, because they might be in an asset class that the rents have been going up, or they might be an asset class that's performing really well, and the barrier to entry might be lower for a lot of other newer folks because capital is harder to get unless you're super qualified. Obviously, we know the capital is a little bit more expensive. So I don't know. I always look at different, you can always be opportunistic. There's always ways to change things. Listen, you might have to move into a different market, invest in a different market, because your market might not be compatible for, fixing and flipping anymore. Right.
mm-hmm.
And you might say, okay, well, I'm going to go, do this or do that. So I think there's always, things never end up being the exact same forever. And a lot of folks that have got into the real estate industry, and sometimes it's kind of a disservice that I feel like if the market's really good and capital is really cheap for a long period of time, because you don't learn anything or you don't know any different, and you get in the game and all of a sudden it's like, oh, this was easy, rinse and repeat, rinse and repeat, rinse and repeat, rinse and repeat. And then all of a sudden you get smacked down and you have no other skills, and you don't even know, like, you only knew that one little thing. So I think markets like this could end up being, in the long run, a good thing. Like, it's a little bit scary, and change is scary for everybody.
I Yeah, I mean, right now, you're really going to see who the great operators are versus the ones that rode the wave. But what we've been doing right now is just, I mean, we're still looking at stuff and underwriting, but really fine tuning our asset management, our operations, our systems and processes. So when the volume does turn back on, we're not bogged down. We're ready. Our systems are in a good place, and we can handle the extra volume. So, that's kind of what we're focusing on right now.
Yeah, we're doing something similar. Jason was bugging me the other day. Hey man, come on, let's find a deal to do. And I'm like, nah, dude, we're concentrating on execution and operations. And that's what we're doing for the foreseeable future. Coincidentally, today, a couple brokers called, and I'll tell you what, there's a lot of deal flow uncovering deals right now for us anyway, has been going back to brokers, finding deals that we were somewhat vaguely interested on that have been traded. I mean, we looked at a deal that we offered $28 million on that didn't work, and the seller came back down to $23 million. Unfortunately, it still doesn't work because of some price retractions in the market and where debt is. And then we had another deal that we were looking at, similar prices, a reduction in price. Like, one of the brokers today brought me 4 different deals, all with price reductions. And then there was another broker I called today that was like, hey, I'm interested in this deal if it doesn't close, because we know a lot of people can't get to the closing table right now. So I think if you want to uncover some deal flow for anyone that's looking, is go back and follow up on your old leads, make sure they close, see where they're at, see if they're willing to take. And the other funny thing is, every broker now is telling us, hey, I think this deal might have some seller financing options, because they know we can't control the cost of capital, but the seller can. And if they can control the cost of capital, then we can potentially get a deal done. And those boys are getting fucking desperate. You can tell that they need a payday, every single one of those brokers. And granted,
yeah.
Was that?
Yeah, I mean, I feel for the brokers, because they're the ones that are in the middle. It's like this staring competition between buyers and sellers, and who's going to blink first, and the brokers are getting the short end of the stick.
Yeah, well, and that's the thing, is that's why I like them, because I know they need to get those deals across the table, right? Like, it's like you're the gatekeeper to something I want, and I'm the gatekeeper to something they want, and somewhere in the middle, if they can get their people to come to us and we have that win-win situation, boom, we can all make some money. So that's what I've been doing a lot of, just following up, talking to them, calling them, saying hi, let them know we still, everyone's like, oh, pencils down. I'm like, I don't even know what that means. Like, yo, we're still here. Like, what's up?
Yeah.
Like, what do you got? What do you got? Literally every broker I call, hey, what do you got laying around, is kind of how I present it. And they all have that one deal. It's just like, I got this stinker that it looks good on paper, but people can't figure it out. All right, let's talk about it.
The pencils down shit pisses me off more than anything in the whole world, the entire world. I mean, there's a lot of different terms for that, and a lot of people will say it differently, but that's what they mean. And I'm like, what are you talking about?
Yeah.
Like, what are you talking about? And it's like, well, we're not going to do deals because there's no deals out there, or, the numbers don't work. And it's like, well, what happens if, a broker brings you a deal, or a seller brings you a deal, or you're actively still marketing like you should be? Probably go all in on marketing right now, because some of my marketing channels have been the best now than they have in 8 years, because in the lending platform space, I don't have much institutional competition anymore. Right. And but across the board, and it's like, well, what happens if, a deal comes across your desk and, it's whatever, a home run, you still wouldn't do it, but like, oh yeah, we'd still do it. Okay. Well, market for those types of deals that you want. The deals you were buying yesterday aren't the same deals you need to buy tomorrow. It drives me absolutely crazy. You should always be looking for opportunities. As real estate investors, every day look for deals. Every day look for money. Every day better yourself and make your operation better. Like, it's not hard.
Yeah, we're still sending out LOIs. I mean, we have a process. If we take it through our full underwriting, we're going to tour the property, and we're going to submit an LOI. It may not work for them, but it lets the broker know that we're still active. It won't
work for them. It probably won't work for them, but who cares?
Yeah.
That's the point. Like, it probably won't work for them. Okay, so maybe your deal machine, instead of closing, 1 out of 5, it's 1 out of 100 that you're buying now. Who cares? You still go through those motions, and the deal you're going to buy is going to be phenomenal. I don't know. That drives me crazy.
Yep. That's 100% true. Christian, before we let you go, man, we appreciate all the time that you've given us today. What we like to ask all of our guests, like, what is one book or podcast or something that you think everyone should hear, or something that you're currently reading that you're enjoying? What would you suggest?
So one of my favorite books is Am I Being Too Subtle by Sam Zell. One of the commercial real estate greats. I've read it multiple times. And each time I read it, I just get more and more out of it. And there's so much you can take away from that book. I mean, from, learning how to be nimble, or to it's just full of good stuff. And then just from that, just, being resourceful. I think I've gotten to where I'm at today is just by learning how to be resourceful and creative, and figuring out how to make things work. If I can't make it work this way, I'll go and try another way, and keep trying until something stops me. But I'm not going to stop myself. So, but yeah, I mean, that's.
Dude, that man, he just recently passed, but dude, the guy controlled billions and billions and billions of dollars of real estate with a small ass team. And me and Jason talk about it a lot, just related to some of the stuff we got going on. Is like, yeah, that dude had billions of dollars of real estate and couldn't make payroll on Friday. And it just goes to show you, like, the perseverance that it takes. And, just because you have a lot of real estate doesn't mean you're making a lot of money. And just because you have a little doesn't mean you can't make a lot of money. Right. Like, and I think there's a lot of great learning lessons in there. And Jason and I read that one a few years ago, and it's really good.
If you haven't heard his interview it's an older interview, obviously, on Tim Ferriss's podcast. I don't know if you ever heard that. Tim Ferriss actually doesn't interview him, but he put it on his podcast because he wasn't able to get in front of him. But it's like a 2-hour interview, and a lot of it overlaps of what's in the book. But I'm sure there's stuff in there that wasn't. Like, I learned his story. I learned about his story, through that podcast. It was a 2-hour one, and it was one just like his book that, if you're reading it or you're listening to it, wherever you're doing, like, you're not moving and you're blacking out for hours at a time, because it's just phenomenal. So that's one of my favorite as well.
Yeah. So Christian, thanks, man. We appreciate you coming on, telling your story. A lot of people are going to resonate with it. If someone wants to connect with you, where's the best place that they can find you on the internet, or reach out to you and get a hold of you, and maybe they got a deal for you?
I'm probably more active on Facebook. Trying to work on my social media presence a little more. But just typing my name in, or you can email me, Christian@cstoneinvestments.com. That's probably the best way.
Yeah, we'll get your contact info in the show notes. And again, we appreciate it, man. Look forward to seeing you here in a few months at the next mastermind event. And again, really appreciate your time.
Yeah, thank you guys for having me.
Yep. Thanks. See ya.
Thanks for tuning in to the Real Estate Reserve podcast. Do us a favor and like, comment, and share our broadcast. It helps the algorithm and helps us spread the word too. Till next time, thank you for tuning in.